My name is Harvey. I am the global head of sustainability for the Nasdaq Stock Exchange. So that encompasses our North American market, but also our markets here in Europe and the Nordics.
And what brings you here today to this conference?
This is an ESG Integration Reporting Summit, so we are convening lots of the top asset holders, asset managers, companies, and analysts here in the Stockholm Exchange to talk about ESG, environmental, social, and governance reporting, how it matters in their business, how it matters to their long-term value creation, and how companies and investors can better collaborate on this topic.
And you were speaking obviously a wee bit earlier.
Yes.
What was some of the reception been like to your presentation?
Positive. I mean, I'm afforded the privilege to sort of be a little bit more aspirational in my remarks, so I talk about everything the exchange wants to accomplish, which is a more just and equitable markets ecosystem, more robust capital markets, more access for investors of all kinds to the markets, and also the markets and the capital markets in particular as a driver for social, political, and economic harmony around the world. I mean, if we're talking about things like sustainability challenges, global systemic issues, business and the markets and the global ecosystem that we sort of have a major role in, maybe the only ecosystem that can attack these issues at scale. Otherwise, they were just too big for any one person to tackle.
One thing around obviously ESG is you said yourself, it's not something that one person can do on their own. Why is it important to get so many organizations involved in all of these policies?
More stakeholders means more acceptance, means more participation and cooperation. I mean, if we have great companies reporting and investors don't reward them with investment dollars, they're going to stop reporting. If we have investors that ask for more ESG information, it's too burdensome for companies, they don't have the expertise to report, they're going to stop reporting. So everybody has to sort of be on the same page on a smart standard, or else the system will break down a little bit. Exchanges like us are in a unique position. We sit right in between investors and companies and regulators, governments, and try to create a healthy market within the three-way conversation. So ESG for us is just another healthy market indicator.
And in terms of kind of the work that Nasdaq is doing, what's sort of on your agenda for the next year or so?
Lots of company engagement, so lots of learning, education and research, white papers. We just published an ESG reporting guide, which they're discussing in there today, that helps listed companies understand what the ESG landscape is and what people are asking for. We are also looking to bring more green and clean companies to market. We want new technology that's going to help address global problems. We want them to list on Nasdaq. We think Nasdaq is the best market for them. And then we also want to sort of we want to drive capital in more sustainable directions. We want to make sure that investors are moving money into directions that actually help the world at large, rather than looking primarily at short-term returns. We want to create a long-term investor base that's looking at the sustainability of the globe and the ecosystem, not just tomorrow's paycheck.
How do you, that is of course the problem, how do you stop people doing that? Because people tend to only sort of think short term and not at the bigger picture.
A couple of ways. One, there's more money in it if you think long term. I mean, $5 tomorrow is better than $1 today, so you have to sort of slowly and patiently make that case. Two is you are impacting more than just your environment with your short-term decision making. Yes, you could probably make money with an oil and gas investment today, but that investment may not hold up over time, and what is the impact of that investment to other individuals, other societies. So if you are successful in expanding their scope of reference around how they make money and why they make money and where they want to put their money, usually it's a pretty positive conversation.
And lastly, what do you think of the event, and why are events like this important?
I think they're important. Broadening awareness is always important. Bringing diverse groups together is always important, especially getting people in the room who may not agree with you. So getting the arguments against ESG sustainability, in some cases, climate change, is it real? Getting them in the room is useful so that you understand their argument and that you can contradict it or counteract it with some of your own. But I think that events like this help to bring together voices that don't often sit together. So like I said, asset managers, asset owners, and investors directly talking to companies, directly talking to exchanges, directly talking to regulators about where they think the medium is between all of their interests.